Hi guys, welcome back to Apex Academy. This is your ultimate home for all your crypto education. Apologies, I've been out of action for the last couple of weeks. I was basically working on something big, something that's gonna be beneficial to the entire Apex community. And right now, I'm proud to announce that actually, we managed to work on a very good strategy that's gonna give us some very good returns in the academy. Okay, so I'm back now. We are back, and actually, I want to announce something that I'm starting a 12 series giveaway on this channel. And what I'm basically gonna do, I'm gonna do 12 videos. Okay, a series of 12 videos, and in all these 12 videos, in every video, I'm going to be giving out one word. Okay, one word in every video. So for those who understand crypto and how crypto works, we have what you call a seed phrase. Okay, so whenever you have a seed phrase, you can actually access someone else's wallet. So I'll load about $100 or $200 in a wallet, and in every video that I'm doing, I'm going to be giving out one seed phrase. Okay, so here's the catch. The catch is you have to watch all my videos, all the next 12 videos. You have to watch every video so that you get one seed phrase in each and every video. Then once you have the 12 words, you can go ahead, import the wallet and get the bitcoins. Okay, I'll put in $100 or $200 worth of bitcoins. I'll decide the amount I'm gonna put in, and then I'll give a word every video, one word every video, so that by the end of these 12 videos, you have the set of the seed phrase. And the faster you get the seed phrase, the faster you import the wallet, the faster you get the giveaway, because it can only be done by one person. So just be keen, be attentive, and ensure that you have all the 12 set of words ready in your possession. Okay, that being said, thank you so much guys for sticking by. I don't take it for granted. Thank you for the massive support that you've continued to show to this channel. We've grown exponentially, by the way guys, and I'm happy to report that come August, we are rolling back our classes. That is the Apex Crypto Academy, where we entail to create financial freedom by teaching a skill that is invaluable, a lifetime skill that can help you be independent in the financial markets. Okay, so that being said, let's dive into today's video. And the video for today is about trading. Basically, one of the things that has really gained momentum in the past couple of years, to be precise. People are really trading. We have people who are trading forex, we have guys who are trading crypto, we have guys who are trading indices, guys who are trading binary, guys who are trading stocks, guys who are trading things like oil, the Nasdaq. And in all these fields, we have one thing in common. Okay, all of us are looking for money. So I'm here today to give you some of the mistakes. Okay, mistakes that traders make, more so crypto traders, because crypto is our niche. Okay, so I'm gonna give you guys the mistakes that crypto traders make and how you should avoid making such mistakes, because you might end up losing more money than actually the money that you're supposed to make from the market. Because remember, the market is not your father, the market is not your mother, and the market is not there to give you money. The market wants to collect money from you. So it's upon you to work smart, okay, so that you can be able to beat the market and collect money from the market. Because remember, the marketplace is a battle. Okay, whenever one person is losing, someone else is gaining on the other end. Okay, are we together? Hope you guys, by the way, like my office. Hope you like the setup. Perfect setup for videos, so that you guys can actually feel whenever we are going bullish, you see the greens coming in. Okay, whenever we are bearish, you see the reds coming in. Whenever we are neutral, you see the white coming in. Okay, enough said, let's dive right into the video. Okay, so now we are bearish. What's happening? Is Bitcoin falling? Let me just check a quick one. Oh, we are down at $30,000 800. Not bad, but I believe we're gonna hit the highs of 40k. And by the way, this, not this year, but later next year, we're gonna have what you call the Bitcoin halving. Okay, and whenever halving occurs, BTC price tends to shoot, because we know what happens during halving. The block reward is normally cut into half. If you don't know what halving is, I have a video about halving. Please just go to my channel and check out that video. It's very educative, and it actually explains what halving is, what halving does, and what you as a crypto hodler should expect from halving. Okay, so let's go to today's video. And the first mistake that traders make is basically lack of research. Okay, so lack of research can be very, very pivotal, especially in the world of crypto, because you're seeing coin X is going high in price. It's making a series of higher highs and higher lows. For example, recently we had Litecoin, which has done exponentially well, because we are approaching the Litecoin halving later in the month of August, end of August, and then because we don't have research, or you've not researched about Litecoin, you don't know why the price of Litecoin is going up, you quickly go and long. Okay, so you long Litecoin when it has made a series of higher highs, it's now at its peak. You long LTC, use very high leverage. Then what happens? Mitigation. Then you start losing money. So lack of research is something that has really affected so many traders, and it's always important before you take a trade, before you take a currency pair, ensure that you've done research on that particular coin. Don't rush to take a trade simply because you are seeing green candles. That is now what you call FOMO, and you should avoid FOMOing at all times. Okay, so the first mistake, a lack of proper research. So you as a good trader, because you've watched this video, then I believe and I expect that you should not fall a victim of lack of proper research. Before you trade a coin, ensure that you check what are the fundamentals of this particular coin so that you don't get caught off guard. Okay, let's go to number 2, and this is very, very critical. It has actually affected so many traders out there, and it's actually a word that has been misused so many times by people who are trading. Okay, and that is lack of a strategy. Lack of a strategy. Underline the word strategy. You just can't go into the market and you want to make money from the market without a proper strategy. You just can't go look at support, look at resistance. You want to buy at support, sell at resistance. That's not a good strategy, yes, but then you need to have a strategy. Even if you're using retail trading, if it works for you, well and good. If you're using SMC, if it works for you, well and good. If you're using smart money, which is SMC, price action, whichever strategy that you're using, ensure that you have one strategy and you stick to one strategy. Because you find some people are trading support resistance, okay? Then you meet someone else is trading smart money. So you want to mix support resistance, you want to trade smart money, at the same time you want to trade order blocks, at the same time you want to trade, I don't know which strategy. You end up getting confused. Okay, so just have one strategy. Okay, back test the strategy, ensure it's working for you so that you can ride along with the strategy. Okay, so having or lacking a strategy is one of the other mistakes that crypto and all other traders in general are making in the market. Let's go to point number 3. And point number 3 is actually very, very annoying, because most people find themselves in such a situation, and that is now what you call emotional trading. Okay, you are trading with emotions. I saw in a forum someone saying that this coin took my money, it has to return my money. That is now what you call emotional trading, because you want to revenge. Okay, revenge trading, emotional trading, they go in hand. Okay, and all these narrows down to what you call the psychology of trading. Okay, you have to have what you call proper psychology mentality when you're getting into a trade, because whenever you're getting into a trade, it's not a guarantee that you're gonna make money from that trade. You might end up losing money, but it's always important to protect yourself. That is why I'm saying emotional trading and revenge trading is one big mistake that has costed so many traders out there their hard-earned money. Okay, so ensure that you don't do emotional trading and you don't do revenge trading, because that can hurt your account. You can blow your account in a day trying to do revenge trading, because you enter a trade, you lose money. What do you want to do? You want to recover that money. Open another trade, lose a trade, because you're trading emotionally. You don't even do your technicals correctly. All you want to see is your money coming back, and instead of that, you keep losing your money, and the cycle will keep over and over again. Okay, so avoid the emotional trading at all costs, because emotional trading is actually a killer whenever you are doing your trades, and it's not advisable that you do emotional trading. Okay, let's proceed. The next aspect, or the next mistake that has cost out so many traders, is what we call ignoring risk management. Every single trader out there, if you did a course on trading, if you went through a mentorship, if you learned on your own, there must be a unit called risk management. Very, very key, very, very essential, because you realize that if you don't do proper risk management, then you are at risk of blowing your account. That is why it's called risk management. Learn how to manage your risks. Okay, we always say that ensure that you risk only 1 to 2% of your account, because I keep telling my students and I keep telling my other traders, if you have like a $100 account, a very small account, let's say, and then you are risking 2% in a trade, that means for you to blow that account, you need to lose 50 trades, which is almost impossible. You can't lose 50 consecutive trades. But if you are risking 10% of your account and you have a $100 account, then that means you only need to lose 10 trades and you are out of business. Okay? So ensure that you have proper risk management, because risk management is very, very key, and it can actually help you stay in business for a very long time. Hope you're together to that point. If you're together to this point, please give the video a thumbs up and subscribe if you haven't already, so that you can keep learning and growing together. The next mistake that crypto traders make, and other traders in general, is what you call over trading. Over trading. You want to take each and every trade that you are seeing in the market. You're seeing a QM, I want to take this trade. You're seeing an order block, I want to take this trade. Seeing a breaker block, I want to take this trade. Seeing an FVG, I want to take this trade. Seeing a week, I want to take this trade. It doesn't work like that. As a good trader, you should always have a plan. Personally, I don't take more than 5 trades in a day. You will never see me take more than 5 trades in a day. 1, 2, 3, 4, 5 trades maximum. That will mean that even my risk appetite is low. Okay, I'm risking so little compared to someone who can take even 20 trades in a day. That's being stupid, to be honest. You can't take 20 trades in a single day. That is exposing your account so much, and you're putting yourself at so much risk of losing even the entire fortune that you have. So over trading is something else that is killing traders out there mentally. You'll have psychological torture on your laptop, on your machine. You can imagine losing 1, 2, 3, 4, 5, 6, 7, 8 trades. You'll have psychological torture. So over trading, avoid. Have a maximum number of trades you can take in a day. Okay, if it's 10 trades, let them be 10 trades, but 10 trades still on the higher side. Personally, I don't advocate for you to take more than 5 trades in a day. So ensure that you have a maximum number of trades that you can take, so that you lower your risk appetite. Okay, then the other reason that is actually helping guys, not helping, but it's causing guys to blow their accounts, is what you call following the herd. When I say following the herd, I mean you're following what other guys are saying without independently verifying what people are saying is true. People are calling, let's short Solana. You've not done your technicals, you've not checked the fundamentals, you just want to go short Solana because people have said short Solana. So always work with your own instincts, work with your own technicals. Even if you are getting a signal from someone, ensure that you go and analyze that signal. Okay, make sure that whatever this person saw as a POI, you are able to see that particular POI as well, because it can be so frustrating for you to take a signal that you've not analyzed, and then the market goes the opposite way. But if you had analyzed that market yourself, then you would have caught that trade. So always ensure that I don't follow the herd, and you always analyze a signal before you take that particular trade. The other thing that traders ignore is security, especially in crypto. You can't trade without securing your accounts. I know most of you guys who trade futures trade on exchange platforms. So ensure that whenever you're taking these trades, your account is secured. What do I mean? Ensure you have a 2FA. Okay, have a strong password. Have an antivirus, because someone can just malfunction your computer. So ensure that you take security very, very key. Also about assets, I've sung time and again, avoid keeping assets in exchanges. Only put in an exchange what you are comfortable to trade or what you're comfortable to lose in the event that your account gets frozen. So trade from an exchange, then remove the profits or sell the profits or withdraw the profits to a non-custodial wallet that is much safer compared to an exchange platform. The next mistake that traders make, I'm gonna summarize this because I don't want it to be that long, is basically the act of impatience and the act of indiscipline. Because it's very hurting to see someone having a very nice setup, a very good POI, they want to short a trade, and then the trade doesn't activate them. What do? They want to chase that trade. So they'll go further down, look for another POI that seems to have formed, let's say something like a bearish QM. They want to short that position. Then within no time, the market reverses back to their previous POI and then sells. So the second trade, they get stopped out. The first trade gets activated, goes in their direction. But remember, they had closed the first order to take the second order. That is now being impatient. Okay? Always be patient because trading is 99% patience. So you need to be patient. You need to wait for your order to get activated. You need to wait for your stop loss to get hit or your take profit to get hit. Don't ever be in a rush whenever you're taking a trade because you will end up losing instead of gaining. Okay? So that is the act of not having patience together with discipline. They go in hand. And in discipline, we normally say you should have three things in a trade. Okay, a successful trader will have a triangle that has three things. So on the top part, we have a strategy. Of course, you need to have a good strategy. Then on this other end, we have what you call risk management. Okay, I've talked about risk management. Then on this further end, we have what you call discipline. So if you combine those three elements, that is the element of having a strategy, the element of having a proper risk management, and the element of having discipline, risk management, and a strategy, then you're gonna be a very successful trader. Okay, so ensure that you have all those elements in place so that you are able to move in the right direction as a good trader. The other mistake that traders make, we have so many of these mistakes. I can't summarize all of them. I think I have to do a part 2 of the same, and that is not taking profits and not cutting losses. And actually, this is very hurting because at times you might find your trade is moving in your direction. Let's say if it's forex, you are up like let's say 25 pips. If it's crypto, you are up significantly, say by about 40% or 50% if it's futures trading. And then you're still waiting for the market to hit your TP. Then what happens? News come in or maybe fundamentals kick in, the market reverses back to your entry point and stops you out. It's very painful, to be honest. So this is what I always recommend guys to do. Whenever you're setting up a successful trade, okay, and then the trade moves in your favor, take what you call a gun box, okay, measure 50% of your profit zone. If the market gets 50% of your zone, take partials, okay, collect 50%, then move your stop loss to your entry point and then leave a runner. In that case, whatever happens, you are safe. You have secured some profits and you've set what you call break even, such that even if the market reverses and goes towards your stop loss, you're safe. You made something from that trade. So ensure that you learn the act of collecting profits and cutting losses, because that is something else that traders make mistakes on. And finally guys, and this is something that many traders ignore. I don't know if it's out of arrogance, if it's out of being overconfident, and that is something very simple: record keeping. Record keeping is very important. Every business out there has record keeping. In high school, we learned about record management, and we said if you don't do proper record keeping, then your business is bound to fail. As a trader, have a journal, okay? Note down, let's say for example on Monday I took 5 trades, I won 3 trades, I lost 2 trades, okay? On Tuesday I took like 3 trades, I won 2 trades, I lost 1 trade. Very, very okay. In that manner, you are able to track your progress and you're able to see from how far you've come and how you are doing, how good you are doing in your trades. So ensure that you have proper record keeping so that you don't you're not able to track your progress. Very, very important. So those are some of the mistakes that traders make, and I will think I'll do a part 2 of the same. If you've loved this video and you've enjoyed so far, please give me a like on the video. Please share down in the comment section what other mistakes do you think crypto traders and other traders in general make, and if you happen to be a victim of one of these mistakes that I've explained here, please share your sentiments in the comment section. Let's have an interactive session and let's know how we can avoid all these mistakes. So I said I'm doing a 12 word challenge, not challenge, a 12 video series where I'm gonna be giving a seed phrase on every video that I'm gonna be doing, and then the winner or the person who get all the seed phrases will basically import that wallet and they'll have access to those coins. So here we go. The first word of the seed phrase that is gonna be a giveaway with $100 or $200 worth of Bitcoin. Please note this down because I'm not going to repeat this ever again. This is the first and the last time I'm giving out this word. And the first word is omit. Omit. Okay? Omit. Description: to remove something. Omit. Like I omitted your car from the list deliberately. Okay? So omit is the first word of that seed phrase. Note it down somewhere. You have 11 more words to go. That means you have to watch 11 of my videos so that you can get access to that particular wallet and be able to cash out fast as the first person. Okay, so that being said, thank you so much guys for watching this video. Please remember to subscribe to this channel. Also follow us on all our other social media platforms. That is at Apex Crypto Academy on Facebook, Instagram, on Twitter. So goodbye guys, and I'll see you on the next one.